Welcome, everyone. Today, Raj Kothari and myself, Isabelle Bibet-Kalinyak, are going to discuss with you the current trends in the United States mergers and acquisitions and private equity market within the ophthalmology sector. My name is Isabelle Bibet-Kalinyak, and I am a partner attorney at the law firm of Brach, Eichler, and I regularly counsel physicians, practice groups, and hospitals in life cycle models, including mergers and acquisitions and private equity transactions. Today with me is Raj Kothari. Raj?
Thank you, Isabelle, and welcome. We appreciate the opportunity to share some insight today. My name is Raj Kothari, and I'm a managing director and founder of Cascade Partners. We're an investment bank that serves a variety of industries, including the healthcare sector, working with physicians as they evaluate their options and strategies as we look at the ever-changing healthcare world. We're going to spend a little bit of time today talking about what's happening in ophthalmology, the consolidation, and what private equity is all about. So what is private equity? Right, private equity is direct investments from private investment funds into companies, organizations, and yes, physician practices. They utilize other people's money to invest in companies, grow them, build them over time, and then sell them for more than what they bought them for and generate a return for both their investors, but in the US, significantly, increasingly with their physician partners. And the market continues to grow at an accelerating rate with over 3,000 private equity funds in the US, with many of them increasingly focused on healthcare. But as we know, private equity isn't for every practice, and really understanding the options and the dynamics that are available are important as physicians and physician shareholders begin to explore the path forward.
Raj, you have a striking number there. $1.25 trillion of dry powder ready. Wow.
Yeah, just in the private equity world, there's that much that is waiting to get deployed into new companies. So often people ask, well, are we at the end of the game? And the reality is success begets success. And there's been increasing success in the private equity world investing in healthcare and physician practices. So we don't believe that trend is going to change. And one of the reasons for that is just the point here is it's a very, very large market in the US, right? Healthcare remains a very large market that is growing steadily, and that is relatively recession resistant. This became really evident after the 2008-9 recession here in the US. And then even after COVID, we saw many physicians' practices return to near normal by the end of 2020, and then hit or exceed their pre-COVID results in 2021. And those dynamics have continued to keep private equity very interested in the physician practice management space.
Yeah, as you mentioned, the market dynamics are very, very favorable, and it starts with the high fragmentation status of the market, regardless of what specialty you're looking at. Even in specialties where we've already seen some consolidation for years, it is still highly, highly fragmented. And ophthalmology and vision care is definitely only, it's already started, but it's still, there's plenty of opportunities there due to the fragmentation. The resilience also was really demonstrated during COVID-19. What other specialty was even worse exposed than an ophthalmologist who is sitting basically inches away from a breathing patient, and the creativity of practices to rebound, and some of them even switching to telemedicine. We never thought that would be possible. And then in terms also, when we think about market dynamics, is the flow of money. In the US, although we're seeing payers and also the government, which is the Medicare and Medicaid programs, tighten up the faucet a little bit and decreasing reimbursements for some high volume procedures, the reimbursements and the revenue trends are still good. So that's attracting. We've got more and more people with healthcare insurance today based on some of the changes implemented during the Obama administration. So more people insured, more money into the market. So, and then in terms of diversification, the market has now understands very well that certain specialties can diversify within that specialty. When we think about ophthalmology, then we have optometry, we have also the vision care, then you get into the different subspecialties of ophthalmology. In a practice, you can have a glaucoma specialist, you can add a retina specialist, whether full-time or somebody that comes and works there just a few days a week. You can own surgery centers, at least in most states. It's still very easy, unless if you know of course the regulations to open surgery centers and increase your revenue from that standpoint. And so everything works together to create kind of like a perfect market to attract investors. So that's why they're here. And then lastly, this is also a market, especially in ophthalmology, where the physicians have understood how to even include even retail sales in there and generate some cash directly from whether it's the sale of glasses in certain markets, but also all sort of things from cosmetics to vitamins, etc. So with a market that's so good and the practices being pretty sophisticated in eye care, what does private equity bring? Why do practices need or may want private equity? Well, there's no doubt that private equity investors just have the expertise about growth. They specialize, they're not surgeons, they're not physicians, but they are the specialists of growth and how to manage and look at a business and sometimes have a paradigm shift so that they see the growth opportunities that maybe has been under your eyes there, but since you function on the day-to-day basis, you don't see or you don't have the time to implement that kind of changes to foster growth. The expertise also is both at the managerial level, but also at the operational level. They have expertise in scaling locations and whether it's within one specialty or multi-specialty and tying it all together so that although you have different locations, you are operating as one seamless machine. So that's where they are king at that. And then in terms of financial support, because you need money to do things, you need money to invest. Money it rules everything, because without money, you cannot scale up, add physicians, add equipment, add locations, add surgery centers. So they have the money, or they can get money really cheap. So by leveraging the two, you get the best of both worlds. And then finally, they also permit to have their sort of like this third-party intermediary in your practice, where sometimes you may have different partners at different ages in their career. And having a third party that is highly qualified and highly respected helps everybody to become aligned and have the same growth goals. So that's what private equity brings to a medical practice at whatever size that practice is at today.
Well, what I say, Isabelle, often is, being a great clinician is a full-time job, and being a great CEO is a full-time job, and too many physicians try to do both. And the business of healthcare has changed so dramatically that the private equity partners actually bring that business expertise to help leverage what is relatively a fixed cost infrastructure for many, many practices. And so our physicians are experts in the eye, and the private equity is experts in building companies, because they haven't done it once or twice. They've done it, dozens and dozens of times, and that creates the opportunity. And the reality is the business of healthcare has gotten so much harder that fewer and fewer physicians are realizing they cannot operate as independently as they did before. The world of the 3-physician practice here in the U.S. is really coming to an end.
Mm-hmm. Yeah, the expertise is unbelievable once you start working with them.
And it's happening, right? It's you and I are seeing it across all kinds of different specialties. So there's not really a specialty that this is not occurring, right? From behavioral, physical therapy, women's health, GI. It's happening across multiple sectors and across all parts of the U.S. at an accelerating rate. And ophthalmology has been one of the faster segments where, really the original transactions were done as early as 2015 and 16, when you had maybe the 3rd and 4th platform in the country. And today, a mere 6 years later, there are probably 20 or 25 platforms around the U.S. in ophthalmology alone. And every other specialty, and you can see from the charts, right, that trend is not slowing down here in the U.S. When you look at it across all specialties.
You and I were just talking before, we are even seeing some platforms that specialize in retina, some platforms that specialize more on the optometry side. And so it's not just traditional ophthalmology, it's going now subspecialty also.
Yeah, great point. And, you can see that happening as the number of transactions. This is purely just within the eye care world, right? And the number of transactions and the population density. And, just from the shading, you can see most states have barely been penetrated. With California and Texas and Florida being some of the stronger, but there are segments throughout the middle of the U.S. that have barely been touched. And we're going to see this continue as we look at the trends in 2021 and already in 2022, a continued growth in those markets and the opportunity that it's presenting for physicians, for ophthalmologists and optometrists.
One of the questions that often comes up when we have discussions at the last conference that we attended, ASCRS in Washington, D.C., is, well, is it too late? Or do I need to rush? And, it's not too late. And things have just began to start. And depending on which state you're looking at, we could probably on average say that if you think about the private equity developments and investments into healthcare and divide them into a cycle that has 3 different types of waves, one being the first and kind of like the launch, and when private equity is learning more about ophthalmology or specialty and investing, creating platforms, then we go into like much further rapid expansion, because it's easier to find practices if you're not trying to create a platform. And then at the end, the market may become more mature, but we're very, very far out there. So depending on the state you're operating in, we could say we're about either in the middle or at the beginning of the second wave when we think about market cycle. On the right side there, you can see some dates. These are private equity investments, but these are mainly, they're the big ones. In between all these lines, we can insert tens of little practices that have been aggregated. So these are just major ones, and then you can see the major players in the market here. So in terms of the timeline for private equity investment, they also invest in your practice at different times. So in the beginning, they think about, they are going to take care of what's most urgent, but they're also going to take care about building the foundation for going forward faster. So at the beginning, we often talk about like a J-shaped return on investment. Is they might, they're investing, so they're spending more money than sometimes is coming in, but they can do that. So they're hiring top tier management people or bringing them in from other entities that are already in the private equity group. They're building the leadership team. They're hiring more clinicians. So heavy investment period. And then from there, they're starting to utilize both the clinical and the equipment and all these investments to fuel growth. And then later, when we're going in year 5, 7, they're thinking about an exit strategy. And that's when we're going to talk later about the second bite at the apple. Raj, what do they do with the money, though?
Yeah, well, as Isabelle said, it takes capital, right? Today, the profitability of every practice goes into the pockets of the shareholder. And today, those are the shareholder physicians. You know, after you do a private equity transaction, have a private equity partner, those dollars are going in different. Instead of the profits going into the pockets of the shareholders, it's getting reinvested into the practice to do all the things that Isabelle described, right? Hiring a professional management team, building the system infrastructure to support faster and broader growth. So one of the big areas those dollars are going to is investing in the practice. Another area is funding the growth through acquisitions, right? As they, you know, if you're starting out with a really big practice, the platform, right, then they're going to go do smaller acquisitions. They're going to buy that 2 or 3 physician practice or 5 physician practice to bring in and leverage the infrastructure that they've just created at this large level. So they're going to use some of that profitability to drive acquisitions, which helps drive value for all of the shareholders, including their new physician partners. And then the last element they'll use is they'll also use it to repay debt, right? When they do these transactions, private equity brings in debt to facilitate paying for those transactions, giving dollars to the shareholders. And so like your home mortgage, as time goes on and they pay that debt down, the equity value goes up, increasing the opportunity for the private equity firm and the shareholder partners. So one of the big mind shifts that happen with private equity is physicians have to move from thinking about returns in terms of cash flow, and they're going to switch to thinking in terms of returns in terms of equity value. And that's a very big mind shift to help them go through. And the reason this is really important is one of the fundamental opportunities with private equity is not just about the cash they put in their pocket at a time a transaction is done, but they're going to continue to be shareholders in those organizations as they progress and grow. And the goal is that you get that second bite of the apple, meaning, hey, if they valued my practice at $100 and I put $30, I put $70 in my pocket and I took $30 and I am reinvested into that new partner. And they're going to continue to add practices. So I'm going to own a smaller piece of a much bigger pie that's going to continue to diversify and lower my risk. And eventually I'm going to get 3, 4, 5 times that money back when those investors sell to the next group of investors. Remember at the very beginning of this, we said private equity uses other people's money and they have to return that money. So they're looking for that exit. And they're investing at the time they're partnering with the physicians, and they want a 3 or 4x return on their money, which means the physician shareholders are getting a 3 or 4 or 5x return on their money. And that's all at capital gains tax rate, which creates an enhanced upside to those physician partners. And so it's a very important part of this as you explore private equity, understanding that I've got to shift my thinking from income to equity appreciation and ordinary income taxes versus capital gains taxes. So looking at everything kind of on an after-tax basis is really important. So going with that is many times we talk to physicians that said, this is great for the older physicians, they're getting a lot of money, but I'm a new doc, I've got 25 years in front of me, why would I ever want to do this? Right. And so for the physicians at the later part of the career, this becomes a nice path for them to create an exit, right? Because their practice has gone up tremendously in value. This is a way for them to cash out and incentivize those younger docs with their portion of the equity to get them excited. But the early docs are like, I'm giving up all this cash flow. And again, it's helping them understand this is about equity value creation, right? Anytime you do this, you get paid as a provider and you get paid as a shareholder. And all that's going to happen is you're not going to get paid as a shareholder anymore because you're going to have equity. You're going to continue to get paid as a provider. And the younger docs have the ability to do this, what we call this flip, the second bite of the apple, multiple times. So even, I took my $30 and I reinvested it, and the new partner sold out and I got 3 times my money back. So I got $90 back. I can still take another $30 and reinvest it, and I still got another $60, almost as much as I got the first time. And I'm playing with the house's money. So it allows them to do this multiple times and create significant capital appreciation, which can be very, very attractive and valuable to physician shareholders. But it's usually only the younger docs that have the opportunity to do this multiple times because it's a 4 to 6 year cycle for private equity to invest, build the organization up, sell it, invest and grow again, sell again.
And Raj, although we still get that question from younger physicians, I think it really fits more the mindset of younger physicians today. They're not the entrepreneurs that their senior partners were back at their age, wanting to be business owners and develop this from the ground. And today they've been trained in large academic centers and these kind of fancy fellowships, and they kind of like that, having all the support and just focusing on the clinical side of the practice. And that's exactly what they'll be able to do. So
and they come off often with far more debt from education than ever before. They don't have the capital or desire to buy in and pay money again to become a shareholder in a practice.
So, and another frequent question is, what does this look like the day after the closing of that transaction? So you basically have new partners. Don't think about it as a total takeover, but it's changed that mindset, and you have basically new partners in the business. So they're going to be focusing on the back office operations. It's all for them about operations, while you focus on seeing patients and providing top quality patient care. So they're freeing you up from all this administrating time and duties that have been burdening you, perhaps except from entering things in medical records. You're still going to have to do that. But everything else, personnel management, recruiting, etc., is shifted to them so that you can focus on the patients. But it doesn't mean they're not going to ask for your input, because the last thing they want is to develop this and it doesn't fit your patient population, the community, your existing structure. So they're just coming in to help it grow faster, grow better in a way that you couldn't do alone, whether it's from an expertise standpoint or a financial standpoint. So they're not going to interfere with the practice of medicine. They're not going to micromanage your day-to-day operations. They would not want to do anything that's going to change and cause change in quality of patient care. So they will also motivate you to continue working. You're going to probably be paid on a base plus productivity or pure productivity model. So, but it is absolutely wrong. I think you started that in one of the first slides, Raj, to think that private equity is only focused on profits at the cost of quality of patient care. That's absolutely not true. They work in tandem together. If anything, they'll be capable of enhancing patient care because of all the investment in the practice. So it is a long-term relationship they're focusing on, and that's really what you can expect. But change is sometimes painful. So you know, if you hear people who have gone through this already, they might have, you know, some little war stories, but it would be the same if you were trying to grow that business and making changes. So it's just part of the process, and everybody learns from both sides. And as long as the parties have done their due diligence and have entered into this in good faith, usually the process goes smoothly, and it's proven it works. It's worked in multiple specialties, and today it works in ophthalmology already.
With incredible amount of success.
Yes.
Well, we hope you enjoyed this primer on private equity and its impact in ophthalmology. On behalf of Isabelle and myself, we want to thank you for taking the time to watch and hear a little bit about our perspective, private equity, ophthalmology, and the M&A market.
Merci beaucoup.